Hi, welcome to Arizona Mortgage News Update. I'm Mike Goblet, your Arizona mortgage guru. Well, it's mid-November. The news reports are that mortgage rates have hit new lows and that the Fed's decision that they announced last week about buying treasuries is designed to also help reduce mortgage rate. So what's been the impact? Well, the answer is, of course, mortgage rates are still near historic lows that they have been. But the media news that you may be hearing right now that mortgage rates have hit new lows, actually the media reports what has happened, not what is happening. Now, without a doubt, mortgage rates, as I mentioned, are still near the historic lows. But the result is that information about the low rates happened last week. And it's a different story this week for a couple of reasons. After the Fed's announcement about quantitative easing or the buying of the treasuries, the mortgage rates did take a little bit of a better pricing. And the stock market, of course, has increased dramatically, which was also one of the effects that they wanted to have. But since that time, mortgage rates have actually been declining in the amount of yield spread that they provide. Now, don't get me wrong, a 30-year fixed rate mortgage is still at 3.875 at par pricing, and that's exceptional. But I can tell you at the other levels of pricing, we've seen as much as a 50 basis point decline in the pricing or the yield spread that we use to cover your closing costs, origination fee, etc. that you hear about. And like I said, that's gone backwards by about 50 basis point this past week. So the media news is what's happened, not necessarily what's happening. The other point about that is what has the Fed's action done and what will it do for mortgage rates? Well, many of the investors are very skeptical this time of the Fed's action, and there's a huge concern that it's really going to add a great deal to inflation at a faster and more uncontrollable rate than even the Fed wants. As a result, the impact, other than on the stock market, hasn't been exactly what the Fed had hoped. And the yields in that are not doing what the Fed had wanted to do. So the question is, what should you expect for the future? Well, the economy has shown very positive signs during the month of October and expected to continue to do so for November and the remainder of this quarter in terms of jobs, unemployment improvement, in terms of the number of applications and everything. I think that bodes very well for the stock market. But as you've heard me talk about in the past, mortgage-backed security compete against the stock market. And if the Fed's action is not doing what it should be doing in terms of helping keep mortgage prices low, I think we may actually have seen the bottom of the mortgage market. Now, I think we're going to stay here, but we may not go any lower. In fact, I don't have an expectation we will, and I think we're going to see a continuing slow rise in mortgage-backed securities, in the yields that they pay, and in the amount of yield spread given back for the consumer's benefit. So I think we're okay for a while. We're not going to see any dramatic rise, but I think the lows are there, and I think we're seeing them right now. So for more detailed information or how this can really impact you, give me a call. Mike Goblet at United Mortgage Financial Group. The number here is 480-503-3533. Let's talk about the specifics of your situation. See how we can use that yield spread to get you into a new low rate on a 30-year fixed or a 15-year. They're all still there, but take advantage of it now and don't miss the last train to Clarksville, because that train may be leaving the station shortly if mortgage rates continue to go. This is Mike Goblet, your Arizona mortgage guru. Thanks for stopping by. I hope you'll come back soon.